Welcome to Red Pill Markets. Today is March the 5th, 2020. Markets will close in 30 minutes, but as we anticipated, markets are down close to 4% across the board. Well, let's look at small caps, IWM. Ooh. Okay, IWM down 4. We saw QQQs down close to 4. Dow's down to 4. What about SPY? SPY is down 4. Okay, yes, across the board. So let's go back to QQQ. I like to use QQQ because QQQ is very close to the Harbor Capital that you always hear me talk about. For Harbor Capital, we're hoping it doesn't close below 208 today. If it closes below 208, we might have major trouble tomorrow. But I don't think the Fed wants to spook the markets like that, because if they do, if we close below 208 today, we'll easily be about 196 tomorrow. Then everybody will start panicking, and then we will have a crash next week if that happens. I don't think the Fed wants to spook the markets like that. So I think everything is going to finish close to 4% down for the day. Tomorrow, I actually think that the markets are going to finish, or the QQQ is going to finish about the 220 area tomorrow. Remember, I was saying it needed to get above 218, and then next it needed to get above 220. And then after that, it needs to get above 224, 226 area. Remember, I said I don't think it's going to hit the 226 area first before coming down. But right now, we're just trying to do damage control going into the weekend. So with that being said, today, we did anticipate the markets coming down because of these large swings. So we have moved over to 50% put them stable value, and then a 50% 2030 target date. So if the markets finish down 4%, we'll lose about 1.25%, I'm thinking. But that's better than 4%. Tomorrow, we are anticipating a huge jump in the markets. So maybe a 4 to 5%, maybe even a 6% gain tomorrow. So we moved over to 100% Harbor Capital in anticipation of that 5 to 6% gain tomorrow. The reason why I think it's going to be a huge gain is because the Fed has to do something to calm the markets, or there is going to be a market crash within the next week. They don't want to panic everybody. They already panicked everybody when they made that emergency 0.50 rate cut. The markets are anticipating another 0.5% rate cut between March 18th and April 29th, and then another 0.25% rate cut shortly after April the 29th. So for the markets to be in such good shape, and the Fed wasn't making any rate cuts this year, to cut 1.25% in a month's period of time, the markets are panicking. Since the markets are panicking, everybody's buying up treasuries. We're watching the 10-year treasury yield. It hit an all-time low today. So Fed is going to do something to control that, to keep that from bleeding off. If it keeps bleeding, more people are going to panic. 10-year yield will keep going lower. Stock market is going to keep going lower. So this is the risk that we're taking. I tried to explain the reasoning why, and we'll see what happens tomorrow. I'll try to go into more detail for the pre-market tomorrow, but until then, let's keep our fingers crossed. Like, share, comment, and subscribe. Later.